Welcome back to another video. Today I'm going to be going through pips, lots and risk management in Forex. This is the beginning of a new series based on Forex content. I'm not going to say it's for beginners this time. It's going to have a mix of content, but of course I'm going to be starting with more basic stuff and then hopefully get into more advanced stuff in the later videos. A lot of people around me and a lot of people that I'm in group chats with are getting into Forex. They're kind of attracted to IDO funded accounts, which everyone knows about now. And because they're transitioning over from crypto, some people do struggle to kind of wrap their head around some of the more basic and smaller concepts within Forex. So hopefully I'm going to be able to teach all you guys that have been asking me questions how all of this stuff works, and it's going to be able to help you. So let's get into it. What are pips? A pip means percentage in point. That's just what it stands for. It's conventionally used as a measure of the movement within markets. You're going to hear lots of people talking about, I caught this many pips, I made this many pips yesterday, or I got this many pips on this pair, or blah, blah, blah. It's just a term that's used very commonly within Forex traders, right? So to start with, let's just look at down here. Pips and currencies. The pip, as in the singular pip, is the digit that is fourth of the decimal point. So 1, 2, 3, 4. This is your pip. You've got one thing smaller than a pip, which is your pipette. And then you've got, of course, here, this will be 10 pips, this is 100 pips, and this is 1,000 pips, right? So if we just come over to this example quickly that I've written up. If this is the price of GBP/USD and then price changes to this, there's a change of 12 pips. Why? The way I would do it personally, both of them have 1.31, right? So I kind of just cancel that out. So what am I left over with? I'm left with 77.1 and 89.1. So all I'm doing here is 89.1 minus 77.1. And my difference is my pips. The difference here is 12 pips, right? 89 minus 77. So it's quite simple. I'm just showing you guys that's how you can calculate pips. If you're using TradingView and stuff, I'm going to show you. You don't really need to calculate it mentally. It will be on there once you're making your setups and everything. But before we move on, here's pips in gold. It works a bit different to currencies, and for indices it works differently, right? Your pips in gold, the first digit after decimal point is your pip, a singular, and the same thing for your indices. So again, you just got to be careful. It works different to your currencies, right? So what are lots? So lots, I feel like, are a bit of a confusing concept. The theory behind them and stuff, you don't necessarily need to know it. I guess the most important thing is knowing how to use them and with context in terms of risk management, which I'm going to get into. But essentially, in Forex, we use lot sizes. When you trade instruments meaning, your currencies, commodities, indices, everything, you're buying a batch of them. The movements in currency pairs in Forex are very, very small. Therefore, a large amount of the thing that you're trading, a large quantity, is required to make decent profit. So we just come back here, right? We're going to use this. Let's just look at this example. I want you to ignore this. I want you to imagine this doesn't say GBP/USD. Let's imagine that this thing here is the price of a chocolate bar, right? These prices. If a chocolate bar costs £1.31 and then this 771 is a fraction of a pence, right? And imagine, let's say you bought one and you decide to sell it for this much, right? So now your chocolate bar, you're selling it for £1.31 and a little bit more for a fraction of 1 pence. You didn't even make 1p profit. That's barely any profit there. And of course, I'm just explaining this to you guys as an example. In reality, you don't even have something smaller than 1p, so that's not even going to be possible. But let's just say it was possible. You've almost made nothing there. So the point is, if you wanted to make good profit, you'd have to buy a lot of this. That's not even 1p profit. Now let's imagine you bought 10,000 of these. I'm not going to do the maths. You bought 10,000 here and then you sold it for this much. then maybe you'd end up with a decent amount of profit. Then maybe you'd make, I don't know, £100, so forth. Like I said, I'm not doing the maths. This is just explaining it to you guys. So that's essentially why we use lot sizes. Lot sizes are essentially determining how many, or the quantity of the currency or the instrument that you're trading, the quantity that you're buying or selling at the time, right? So these are just some common terms and things you guys should know. Like I said, you buy it in batches, right? So 1,000 in terms of quantity is a 0.01 lot. So if you use a 0.01 lot on your MetaTrader 4, that's what it means. You're purchasing 1,000 of the said thing. This is known as a micro lot, and then so forth. You've got your examples for 0.1 and 1, your mini and standard lot. Your lot sizes determine how much of your capital is at risk. So that's what we're going to get into now. That's very important. Your lot size times the pips gained or lost, so the movement in pips, will let you know your profit or your loss, right? That's going to sound a bit confusing, but I'm going to show you guys visually, so it's going to make more sense. The movement in pips multiplied by the size of your order. So that's just me breaking it down. If you know how many pips your stop loss is and what your lot size is, you can figure out how much money you can lose, like I've written here. It's going to determine how much capital could potentially be lost if your stop loss is hit. But let's get into it on TradingView so it's easier to understand. Okay, so I've got the GBP/USD chart here. I'm not actually going to look for a setup, but let's imagine that, for example, we decided that we're going to be logging GBP/USD from, I don't know, let's say here. And let me just make this a little bit better. Our take profit is, let's say there, stop loss is down here. Cool. So first thing, like I said to you guys, on TradingView, what you can use, this setup, putting your long or your short setup, does already tell you how many pips. So you see this number here, this 42.6, that's the amount of pips, right? And you can calculate yourself, right? Because my entry is at 1.30939, and this is my take profit. So if you do the take profit minus the entry, you should end up with 42.6 pips. The same way it shows you for the stop loss. It shows you 9 pip stop loss, right? So this is essentially telling you how many pips your stop loss is and blah, blah, blah. So now that you know how many pips are in your trade, you can start to figure out which lot or what lot size you should be using, right? So I'm going to show you guys which website, which calculator that I use to do this. Okay, so this website is called Cashback Forex. There's a lot of lot size calculators online, but I just like to use this specific one. It's quite simple, it's user friendly. So let's just get into it, right? So our currency was GBP/USD. Our stop loss in that setup was 9 pips. I don't know, let's imagine our account balance is $1,000 and we only want to risk 1% that trade. So what does that mean? If our stop loss gets hit, we'd only be losing 1% of this, which is $10, right? And of course, we'll just keep this as USD. This tells me the lot size that I need to use in this trade. Your take profit doesn't really determine which lot size you need to use. When you're using or when you're picking a lot size, you need to think about, like I said, your stop loss. Because you need to think of how much of your capital is at risk, how much money you could be potentially losing. Another thing about this calculator, it tells you this is the money at risk. $10 is how much I'd be losing if I took this actual trade. If my stop loss was 9 pips, it's on GBP/USD, right? So again, you can manually calculate these things, but I'm telling you guys, you don't need to. Just keep it simple. You've got all these calculators online. I'm going to leave the link for this one in the description. And of course, once you got your setup, once you figured out, this is 9 pips, it's 9.1, then you can put that into your calculator. You can put in, whatever else it's asking you for, and it's going to tell you what lot size you need to be using. So, yeah, back to the presentation. So that was a bit of a shorter video from me today. wanted to kind of keep it to the point. These are very basic concepts. You don't need to know the theory behind them. If you really want to, you can go out there and research. I'll link another website below, which will be very useful to any beginners. It's called BabyPips. A lot of people start to learn from there. But again, here's all my socials. I now have a public Telegram chat. I'm also going to leave the link for that down below. Everyone can join, subscribe, like, and share. And I'm going to see you guys very soon in the next video.